This is Alan Farley from FX Empire. Lockheed Martin ended a very strong rally up around the 360 level at the start of 2018 and entered a corrective pattern that sunk down to the 250s at year's end. It returned to the prior high in the second quarter of 2019 and broke out, posting very impressive gains up to February 2020 when it topped out an all-time high above 440. The pandemic then hit and the stock lost, almost 200 points, settling around the 260 level. It regained a good portion of that, jumping back to the 76 retracement in April, and then settled into this choppy pattern, which is switching back and forth across the 200-day and 50-day moving average. Now, this is a holding pattern. Of course, we've seen many stocks go through this, but Lockheed has a very special circumstances coming up called the U.S. presidential election. The company is very dependent on very big congressional defense budgets, and some investors are worried that a Democratic administration may reduce those defense budgets. Now, history tells us that Democrats have been as fortunate to military budgets as Republicans have been in past administrations, so it's really unlikely that the U.S. military budget is going to take a very big hit. But investors may be a little bit nervous at this time, and we may not see many gains or we may not see much movement until the end of the year. Meanwhile, accumulation, which hit an all-time high in February, took a little bit of a hit coming down into March, and now it even posted a lower low into July because of the election getting close. But it really is still pretty high up in this long-term range. And the outlook for Lockheed has to be highly bullish because they have a very dependable source of income that's likely to continue for decades to come.